Welcome folks to another update for platinum, copper, iron ore and crude oil. As you can see there, platinum has gone sideways since our last update. Copper and iron ore have dropped slightly and crude has increased slightly. We go to the heat map first off. Top left there you can see on the monthly, weekly, daily CCI 150 trends. Overall on the monthly we're predominantly bullish with neutral on iron ore. Bullish also on the weekly with the exception of crude, which is showing a bearish outlook, and predominantly bearish on the daily on all of those, plus the other indicators which we do videos on occasionally on other times. In terms of a trading idea, and I'll go through this with you in the video, but we look at trading on the trend of the higher time frame. So for example, if you're trading on the daily, we look at the trend on the weekly, or if you're trading on the intraday, like the 1 hour, 2 hour, we trade in the direction of the daily. Step 2, we look at entering a trade when the CCI 150 has a fresh breakout from the CCI moving averages, and we close a position when the CCI 150 enters that moving average range. So platinum's had a nice bull run on the monthly. It's gone up and it's broken up past the moving average range of the CCI 150. On the weekly likewise, although notice it's pulling back at the moment towards that moving average range, so still bullish. And on the daily it's actually bearish at the moment. It's actually broken through that moving average range and to the downside, so we might see further downside. You'll notice here we've got a support line at 1022 after hitting that resistance at 1105, so potentially further downside to come. If we go to the daily and the hourly chart, you can see here since our last update it's pretty much moved sideways after having a bit of a roller coaster ride. At the moment on the hourly chart it's still breaking to the downside, and what I've got here is moving averages on the price chart as well as the moving averages on the CCI 150, and when they're both broken to the downside like they did here, that's where you would potentially place a trade. At the moment, you'd still begin this trade until one of these breaks into the moving average band. You can see there it came close to breaking up there, but then it continued to fall, and it's still falling as we speak. So that's still in play, short positioning. Now, back here, for example, you would have gone long during that period. At the moment, you should be going short, but during that period, you should have been going long. And if I show you the indicators, entries and exits of that point back there, so going back to around the end of April, 30th of April, you can see back here, that's where you would have started going long. Now with a couple of false breaks there, with a few losses, until it started breaking to higher, and at this point it broke up there to about 38 points after a few small losses. So you can take a few of these as a hit, so long as you trade along with the larger time frame on the daily in this case. One thing to notice as well, back here we had a bearish divergence between those peaks there, so the equivalent on the price chart, that's where you would have taken notice of that. So after this started falling off, you would have potentially either stopped trading long positions and possibly looked at shorting the platinum at this point. Now at that point there, that was the peak of it, and it fell off quite substantially, and you can see there, had we drawn a Fibonacci range from that low to that high, you can see there it's bounced almost perfectly off that support line, which was near the 38% at 1028, and it bounced up from there. So that bearish divergence worked quite nicely. Next we'll look at US crude. Now on the monthly we're bullish, but notice it's pulling back towards its moving average range. On the weekly it's bearish, it's below the moving average range, and on the daily it broke up a bit again. So it's very volatile in terms of the CCI movement on this one. So it's pretty much moving sideways. So again, bullish on the daily. Now if we go to the hourly and the daily charts, and you can see here, predominantly would have been going short during this period with that little false break above there. Notice also the price didn't break above its moving average range, so you probably wouldn't have started going long at that point there. So going short from this period onwards, that would have been back from this point. And if I pull up the short positionings, you can see there it's a bit hard to read, but basically going short during the period, especially when it breaks below, so you would have gone short during that candle there at this point here. Let me just remove that Fibonacci. So around that point there you would have gone short. That generated 209 points. Then I had another short entry there, 65. There was a little couple of false breaks there, but again you would have avoided going short during that period when it broke into the moving average range. And then once it broke down again, the price was below the moving averages, and the CCI broke below at that point there, which happened to be around this point. You would have entered short again at that point. You closed out there at 15 points because the CCI broke into that range, and it had a few other wins as well, a couple of false breaks, but you can see there a few other wins as well when it broke to the downside. Notice also we had a bullish divergence on this point versus the price, and the price actually bounced from there. Now if I go to where we are at the moment, you can see there we've got a nice little pullback to the upside on the price as well as the CCI, and that would have been potentially going long during that point there. So at this point though, notice also the price and the CCI is pulling back, so just be careful about going long. I'd like to see a bit of a bounce above and the daily turn up as well on the CCI to be more bullish at this point. But on that basis, we should see the price and the CCI on the hourly chart also break to the upside if that were to be a bullish trade. High grade copper has been bullish for a number of months now and still bullish, although notice this candle at the moment looks like a bit of a potential shooting star. The weekly is bullish still, but notice it's also the CCI is pulling back towards the moving average range, so we might see that break into that range, if not this week, maybe next week. And on the daily, it's already broken to the downside in a bearish outlook, so careful about this one. Predominantly short trades only. On the hourly chart, you can see that it's dropped off since our last update, pretty much moving sideways, and it's falling off again as we speak. So again, going short predominantly, especially now that it's broken down past the moving averages of the price chart as well as the CCI. So predominantly short trades. Had you gone short at that point there on the hourly chart, you'd still be in the trade as we speak, and you can see there it's actually falling off as we speak. A nice big bearish movement to the downside on high grade copper. Lastly, iron ore. There's no indicator for the CCI on the monthly. On the weekly, it's a bullish movement with the CCI above its moving averages, although notice that bearish candle. On the daily, had a bit of a ups and downs there along the above and below the moving averages, and we're currently broken below, so bearish trades only should be taken on the smaller time frames. Remember also, if you're trading on the daily time frame, you only trade in the direction of the weekly, but at this point you want to make sure the daily is above the moving average range when the weekly is as well. If we go to the hourly chart, again you can see a drop off since our last update after hitting this resistance, and that resistance at 923.50, and you can see there the both the CCI and the price have broken to the downside, so only short trades. And using the short indicator here, again you would have gone short at this point and you're still in the trade at the moment, and you close out that trade whichever breaks up into the moving average band first, the price or the CCI. So at the moment you're still in the trade for this one. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.